All right, we're recording. All right, so today, how to reduce losses and book profits consistently swing trading futures. Um, it's like many people, myself and Becky, who's the co-host, she's also my trading partner. We went through all the cycles new traders go through: big wins, big losses, big wins, big losses, big losses, bigger losses, bigger losses, wins, and then what had happened is that we had to find what works for us in a way that we were comfortable trading. We had a vision of how to trade and how to make money in the markets, and we got a little sidetracked with some really complicated stuff with options, really complicated option trades. And part of that is because we're here in the Silicon Valley where there are a lot of people with really, really smart, well-educated people who like complicated, really, really complicated things. And that's the crowd we hung out with. That's the crowd we were learning from and learning with. Really complicated stuff. And it worked, but there was so much of a downside to the real complex strategies. It wasn't until we started actually meeting up with people, professionals who traded their own real money, their own real capital. And we started meeting those people at like the Traders Expo in Las Vegas and the Money Show. And we kind of started redirecting to pure directional trading using, especially with futures and with options, but just pure directional buying calls and puts, not the fancy spreads. But the futures was what we made our best money at. The only reason we stopped trading futures was back in 2008 and 9. The margin got so high, we were margin out of the market basically. It just cost too much for us to do what we wanted to do on swing trading on daily charts. We're not day traders. We're not going to sit there in front of a computer for hours every day because we have lives, we have jobs, we have everything else. So swing trading futures really worked for us, but the margin just killed us. So we just switched to Forex for quite a while because we could trade smaller size and it worked extremely well. But then around 2019 came the micro futures. So we switched back from Forex to the currency futures. So we trade the Dow, NASDAQ, Russell, S&P, and the currency futures, Australian dollar, British pound, Canadian dollar, euro, and Swiss franc. And that's the extent of the futures we trade for multiple reasons. But those are the ones we can get the best results with the least amount of effort, so to speak, and very consistent trading with that small grouping of strategies, excuse me, of symbols. Let's just scroll down here in the handout a little bit. I'm going to put in the chat window again, the link for the handouts. It's on our website. You can download it from there. So anything we're going to be talking about today is for educational purposes only, not giving any specific trading advice. What we're showing you is how myself and Becky approach trading the market and how we profit from the markets very consistently. We got through that point a long time ago where we were losing, 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 and then going back and forth. Now is very consistent trading, very consistent year-to-year profitability. And that's the goal of anyone I'm coaching, is to get to that point. Like I said, these are the only symbols which we trade, and this is what we specialize in. Will the strategies work on other things? Yes, but we have very focused on just these strategies for multiple reasons. But this is what we trade and nothing else. And these also have the micro futures available. Not everything has micro futures. And an example of where micro futures really comes into play for people with smaller accounts. Let's say you have a $5,000 account and want to swing trade these futures. Sorry, it ain't going to happen if you have to trade full-size contracts. You can only place one trade at a time, and that's going to risk 20, 30% of your account can be wiped out if you have one loss. With a $5,000 account, you cannot trade the indices, so to speak, the Dow, Nasdaq, and S&P and Russell, but you can trade the currency futures because you can risk as little as $100 on a trade with the micro futures for the currencies. So for smaller accounts, trading the currencies are perfect, extremely, extremely profitable. Best results we have of everything we do and trade the micro futures are the most profitable, period. Or, well, not just micro futures, but the currency futures are the most profitable. And second most would be the index futures, but they require a little bit more capital. So if you want to be trading the index futures, you probably need at least a $10,000 account. Even with the micro futures available, you need a little bit more capital to deal with the margin and the size of the stop losses for the indices. Um, and what are we going to be showing you today? In the last few meetups we did, I had gone through trading the history of the last few years of the currency futures. So I was asked, well, what about index futures? What if we also trade in index futures? What does a profit and loss look like for if we're trading the index futures and the currency futures? Okay, so I've been focusing on the currency futures since they're the best. So today I'm going to show you the last several years what profit and loss looks like if we're also trading the index futures. So stay tuned for that in a little bit. All right, so I'm gonna scroll down a little bit. This is one of the strategies we might go over. We've gone over this in the past, but and we'll touch on this a little bit later on. So, but first I want to, if you have any questions, don't raise your hand, just unmute and ask the question or type it into the chat window and I will address it and I will answer it for you. As we go in here, I know, Olga, did you ever fix your or get your NinjaTrader 7 working? Or do we have to look at that a little bit later on? Are you good with that? If you can connect, let me know. I think you're online. So Olga, so let me know if you're able to get your NinjaTrader working, and then if not, we'll take a look at it later today sometime. All right. So I'm going to switch off to the spreadsheet that has a trade listing for the last several years of trading all of the futures strategies. And I know many of you have seen the listing and the P&L with just the currencies, but this is with the currencies and the indices. So I'm going to go through this listing and this P&L and show you the power of consistency and how myself and Becky went from losing to making money consistently really has to do with especially the futures and being able to have predictable income. Keyword predictable income. Even with trading, yes, your income can be predictable. I need someone with a calculator who can do some numbers for me real quick. So someone get a calculator. I don't care if it's old school hand calculator or on a phone, but have a calculator. And I want to throw these numbers out there so you understand how we can have predictable income. We average about 85% wins on the currency futures and index futures, okay? We do everything based on percentage return, so let's start with that. If we're risking $1,000 a trade and we have 20 trades, that's if it's 85% wins, we're going to have 3 losses. 20 trades we place, we're going to have at least 3 losses. Okay, that's 85% wins. If on 20 trades we have 17 wins and 3 losses, and we're risking $1,000 a trade, that means for 3 of those 20, we're going to lose $3,000. On our winning trades, we average low end, worst case scenario, we average about $400 per win on average. That can be more, requires more work, but the low end average, we always go worst case scenario, 17 wins times $400 is how much? What's 17 times 400? Going worst case scenario, this is straightforward.
6,800.
How much?
6,800.
Okay. 6,800. I just typed that in, $6,800. That's 17 wins, averaging $400 per win, minus three losses, which totals $3,000. 6,800 minus 3,000 is $3,800 profit net. That's how we trade. It's just wins and losses. Okay. 85% gives us cushion. At 80% wins, we're still making really, really good money. At 75% wins, we're actually still net profitable. Not a lot, but we're not losing money. Okay. Our low end acceptable is 80% wins. Okay. That's our low end. We don't take any trades where we expect less than that. Some people do. That's okay. That's their choice. Um, and some people go off plan, and that's their choice. I know there's one or two people who I know on the call right now that took one of those off plan trades in December and took a loss or two. If they want to confess who they are, go ahead, but I won't out them. But it was off plan trade and it went wrong. So they locked in a loss. It happens. You make a business decision and it doesn't work out. You move on. But as you notice, if you follow the plan, we would have placed zero trades in December, zero losses. Okay, because we had a couple of losses. We don't trade these strategies in December. There's a lot of things happening in the markets in December that throw the technicals off. So we can't rely on this stuff in December. In December, we trade our options, basically. All right, let's go through these trades. I show this usually for the currency futures, but now I'm showing with everything, including the index futures. Starting in 2019. If you were starting the program with me in 2019, and this is how you started out with, you would probably not continue or want to continue after this first month because you'd be losing a whole lot more money than you were making. And you'd be like, this program I signed up for does not work. It does not work. It's like, it's awful. It's the worst ever. And that happens. If you're the one that happened to sign up in this month and start in this month and happen to get these losses, that's the thought process you're going to be going through. That is why I really want to have people understand the big picture of trading and profit and loss. It's not about any one day, 1 week, or 1 month. But if you understand the profit and loss and you have in your trading in a very business-like structured manner where you have defined risk and expected profits, what you got to do is keep trading. As long as you didn't make any mistakes, you followed the rules, then yeah, you had a sucky month. February, on only a couple of trades, you made back all the money you lost. You're making back all the money you lost, and then the next month, totally profitable by keeping trading. You just keep placing the valid trades. You have to trust the numbers. Yes, you might have a cluster of losses in 1 month. That happens. That's just normal luck of the draw trading, but you don't stop. You have to trust the process, trust the strategy, trust me, and trust statistics, numbers. I'm a numbers guy. I don't care about feelings and stuff like that. Remember the first time Becky was doing something with doing the trades, and she said she didn't feel like. I told her, I don't care about your feelings. And she was momentarily like, what? But that, yeah, I don't care about your feelings. This is business. This is just all about numbers. You got to put feelings in check when you're dealing with this because losses messes with you. Wins actually mess with your emotions also. It's not just losses that mess with your emotions. Also winning, making money kind of messes with you also. I've been on both sides of that. Even now, it's still, no matter how long you've been trading, you're still going to feel it. But you have to keep that in check and just place your trades. So first month, it's a -% return. Just so you understand, we're going with $1,000 risk per trade based on a $25,000 account, this is 4% of the account. We're doing a 4% account risk. No, the risk levels 2% to 4%. 4% is absolute max. Normally it's about 2 to 3% account risk, depending on how big your account is. No bigger than 4% absolute max. So this is based on 4%. If you want to see what the numbers are like with a 2% account risk, divide everything by 2. It doesn't matter if it's a 25 grand account, 50, 100,000, or $1 million account, the same exact percent return. Okay. If you want a 100 grand account, this everything is just this would be $4,000 loss, and this would be 4 times as much for the win. That's all it is just percentages. So this works for any size account, okay? Percentages don't change. The percent return doesn't, if it's a $1 million account, this percentage is the same, this percentage is the same. As a $10 million account, this percentage is the same, this percentage is the same. Does not change percent return. All right, so we're going along in 2019, each month, good profitable months. This one, extremely profitable months with no losses. It adds up really fast when you're trading per plan and you trade the way we trade, following the rules we use. Got to follow the rules. And it's just nice, steady trading. Each month profitable, except we only had one losing month. At the end of 2019, it's a 73% return on account. Okay. There are people who say, we want to double our money. You don't double your money by taking higher risk. You can change, you follow the exact same strategies, but it's just a percentage of the account you're willing to risk, but do the same percent on every trade, basically. But I said 4% is really max. And when I say max, you're going to have enough margin in your account. You have enough money in your account to accommodate a margin. So you can only place so many trades at a time. So that's something to keep in mind, margin. You don't want to get over leveraged. Okay, so in 2020, one of my most profitable years of trading, that was the COVID year. I'm not even sure we had a losing month. It's just book profits. Every month, a profitable month. Okay, we had one slight losing month. And I always tell people we're going to expect to have 2 to 3 losing months every year. And that'll be negated by 2 to 3 winning months, and the remaining 8 to 10 months will be your net profits. That's true. So we had October was a losing net loss, small loss. As long as you keep booking profits, you need the profits to offset the losses. So you can't get hung up on losses and then stop trading. Some people stop trading after a loss. You can't do that. You got to keep trading and booking profits, booking profits. End of the year, hey, you doubled your money. That's how you double your money, by being consistent. Okay, 107% return. That's how you double your money. You follow the rules, and there are ways to maximize these. This is low end options, the low end as far as managing just all in, all out. If you want more than what's shown here, then you have to actually trail stops and do more work. This is just all in, all out, just minutes worth of work. 2021, continuing on, this is with the index and currency futures together. You would have seen, if you took a look at just the currency, I think we have a tab here, just the currency futures. And in 2021, just currency futures. So this should actually be, this is based on 2% account risk. If it was 4%, double. So we have all the numbers for currency futures and index futures. So this is, oh, here's the 25% one. For 2021, 4% account risk, here it is. So 2021, 61% currency futures only. So we just track all of this. So this is index and currency futures. So 2020 with 107% return. If we did currencies only in 2020, it was 65% return. So doing currencies only in 2020 was 65% return. And doing currencies and index futures in 2020 was 107% return. All right, we have more trades, more wins, so that's the difference. If you have the capital and you can trade more things, great. If you have less capital, then you focus on the currency futures. If you have more capital, you do the currency futures and the index futures. Just be consistent. All right, 2021, there are no bad years with this stuff, so the money adds up quickly. This is with, once again, with 4% account risk. If you want 2%, divide this by 2. Doesn't matter how big the account size is. I mean, it's the same, just percentage return. 2022, I remember we had a couple of extra losing months. So excellent January, but we gave back some money in February and March. It happens. So far, we're net positive, and then it just keeps going on. Win, win, win. So that was our 3 losing months for the year. When it's all said and done, 66% return. And we had 3 net losing months, offset by 3 winning months. But we're making such consistent profitability. As long as you keep trading, the numbers add up quickly and it offsets your losses. 2023, 1 small losing month. October was a net loss. And when the year is all over, 70% return. Now, if you started out in October trading the strategies, you might be real discouraged because you had a bunch of losses early in the first half of the month. But you got to keep trading. That's what I do as a coach. I have to actually coach you because it becomes a psychological thing. You got to keep trading. You have to go through at least 3 to 6 months of doing the strategies to see the profitability, to know what to expect, because you got to be able to see how you recover from the losses. And just being consistent is really so key. Just keep trading, keep trading, keep trading, and trust us, and you develop trust in the strategy, the approach we use, and because it works. This approach to trading we've been doing since probably 2008 or 9, and we know it works. We have changed some of the trade management along the way, but the technical type stuff and approach we use and targeting and stop losses, that really hasn't changed over all this time. It really hasn't changed much at all. We just got more efficient, but it really hasn't changed how we trade. 2024, especially with futures. These are all the trades for 2024. Index futures and currency futures, and 58% in December for the account. That's based on account. Doesn't matter how big the account is. And here we are right now in January. We had 1 Russell trade this past week. That one hit the first target, and I was talking to Dustin earlier. We got 1 valid this weekend, which we're going to look at this afternoon because I'm meeting with him a little bit later, and then an actual in-person meeting. And we're going to go over some of the index future stuff, and that one's going to be on deck to get a live trade placed because it's valid for this weekend. A different strategy, same symbol, Russell 2000. All right. As far as profitability goes, is there any question about any of this? I know most of you have seen this before. Do you have any questions as far as this stuff goes? Okay. Since everyone here is, at least in the meetup, current coaching clients, are there any specific questions you want me to go over on anything? I was going to go through one strategy, but is there anything specific you want me to go over or talk about, or anything at all more specific? Since it's quote unquote just us for the moment, so to speak.
Hey, everything. Can
Hey.
you hear me?
Yeah.
Yeah, so one of the questions I see, obviously you got all the different strategies, right, that interpolate over time, right?
Yeah.
Is there any one that you think is, like if you're starting out on the currency futures or whatever, is the better one to try because it has a higher percentage, or is there one that tends to occur more frequently, or what's the easiest one to get started with, I guess is
Currency
the question.
futures. Currency futures have the lowest risk, highest win-loss percentage, most trades among the futures, and you can start with a smaller account. If you
And
only have a
actually,
few, so.
Yeah, so my question was actually about which strategy, like bear attack or squeeze play
Oh
or
no,
key lines.
it's not based on a strategy, it's based on trading the group of strategies.
Group. Okay. Okay,
Yeah,
got it.
because um no one strategy gives you so many trades that you can just rely on one strategy.
Got it.
Um, let's go. I'm going to switch to the chart just real quick, just to get a quick visual, because it helps if I show you on the chart. Okay, this is a chart of the Canadian dollar futures. And in your handout is an example of all the valid trades. It's the TNT 52 sell. And it's a trend line trade. It's a very rules-based way to draw trend lines, which I go over with you. But it's basically we got the trigger lines here. They touch the upper. This is an upper. This is a Bollinger Band right here, upper and lower. So we price touches the upper Bollinger Band. Trigger lines form a V. Price touches upper Bollinger Band. Trigger lines form a V. Here's your V. This is a touch point for the trend line. Then you look for the previous V. That's lower. Here is the previous V. It came down, formed a V. This might look like a V, but it's actually flat. So this is not a V, it's flat. Look in the data box here to see the actual values, plot one. So here are the actual values. So here's the bottom of the V. It was, this point was lower, then this point went higher. So here's the bottom of the V. We draw a trend line from here to this point and extend to the right. So like I said, so just a review. Price, this candle touches upper Bollinger Band, followed by the trigger line forming a V. Now we have this two touch points to draw the lines, one from here and the previous bottom of the V. Here is our trade signal day. This is the TNT 52 sell. This can only happen after price goes up and touches the Bollinger Band again. This happened in October 24. It can't happen again for this strategy until price goes up to the Bollinger Band again. That might be 3, 4, 5 months later. Did that happen in October? This is now January. It hasn't gone back up there. So this strategy is great for market tops, but you only get so many trades on one particular strategy. You get great trades from that strategy, but you don't have enough. But you want trades down here, you want trades here, you want trades all along the way also. So that's why we have different strategies. We have strategies that get you in at the very top, strategies that get you in once a trend is established, and we have strategies that get you in at the bottom, and we have strategies that get you in at once the uptrend is established. And we have different types of strategies like that. Some are trend following strategies and on some are counter trend. They're all over 80 something percent wins, but we get in at different points in time. That's why we have different approaches. Olga has asked a question, can I go over the TXD trend line cell? Okay, I'm going to close this. Let's see. Let's change. I'll stay with this symbol just for template load TXD futures. All right. He wants to know about the TXD trend lines. Looking for, let's pull up the index futures. I'll go with ES. All right. Want a good clear example. Okay, let's go with this. TXD trend line
Are you looking for the buy or sell?
sell.
Sell. Um,
So I'm going to use this as an example on ES on 8/2/23.
okay.
Usually you will see the market, this is index futures, this is the ES. Usually the market will be declining and you're going to see the trigger lines more often than not in a bearish cross. But when you see the market declining, you always looking back in time for the trigger lines to have completed two previous bearish crosses. It crossed bearish, crossed back up bullish. That's one completed bearish cross. It crossed bearish, crossed back up bullish. This one doesn't count. There's a little bearish cross there. 1 day deal, 1 days don't count. Basically a onesie doesn't count. If it's crossed for 1 day, it doesn't count. So once I have a bearish cross completed and a bearish cross completed, I now have 2 points I can draw my trend line. The bottom of this point here to the bottom of this point here and extend to the right. That's my signal day. All right. So completed bearish cross with a higher low. It can't be low. It has to be a high. This low point has to be higher than this low point. And I draw from that point to that point there and just extend to the right. And the first close below this line is my trade signal day. That's the TXD trend line. I think we had one on Russell. That's the one I was talking with Dustin about. That's the one that was in the email I sent out a couple of days ago.
I don't think that one meets the criteria though.
Which one?
That last one you were just looking at,
Which criteria?
because it needs to close above the lower Bollinger Band.
If it didn't close above the lower Bollinger Band, then it would not be valid for that particular strategy.
Okay. Yeah. And it's not on your chart of
Yeah,
trades that you made.
I'm looking for the technical setup.
Right. Okay.
So this is what I was talking about with Dustin about the previous trade. So that has happened this past week. Here is the bearish cross, and here is a second completed bearish cross. Okay. Here's the low point of this bearish cross. Here's the low point of this bearish cross. Now I can draw my trend line from low to the low, and it closed below on this day, and this was my trade. Okay. That's the
So,
TXD trend line.
so
So
that second point though, isn't that a onesie?
no, because if the 1Z was in the bearish cross, this is 1, 2, 3 days in a bearish cross.
Okay.
This is on the bullish side. So if I was doing a bullish deal, that would not count as a point to draw the line to, because it's a 1Z on the upside.
Okay.
But if I'm doing a bearish side, this is many days, and this is 1, 2, 3 days. So I have two valid completed bearish crosses. Then I can draw my line. And
Okay,
that
I
was the
see it
trade.
now.
And that was
Yeah.
91% wins, I think, something like that. And there's another one different strategy valid this weekend. I'm not showing it here, but the new one is 92% wins. But that's the TXD trend line sell. This is actually one we did on Forex for many, many years. We were trading Forex for probably at least 10 years, 10 or more years. This is one of our favorite strategies, the to trade and approaches. So it works extremely, extremely well. It worked on Forex and it worked extremely well for our index futures also. So
Hey, Eversley.
yeah,
Yeah, this is Ken.
they can.
If I could make a suggestion for you guys in the uh, paperwork that you send out about these different crosses,
Okay.
when you're describing those, is when you say bearish cross or bullish cross,
Yep.
to signify when you're looking for two moves like that, two crosses back to back, to put either a letter with it or a number. So to say bearish cross number one and bearish cross number two, um, to help designate what you were just describing there is like bearish cross number one, number two cannot be below bearish cross number one because it can get confusing when you're looking at a number of crosses back and forth.
Well, based upon your feedback and commentary and another person's feedback and commentary, I've been putting pictures in
Yes, you have, and I commend you on
because Ken said, it'd be great if you added pictures.
that.
So I listened to you because you were not the only one. There was another person also that had the same kind of comment. And so that's why I've actually been putting those screenshots in. And I put the screenshots in showing where the two lines are drawn, or where the line is drawn. So if you look back at from when I sent this trade out on last week, you'll see the picture showing the line drawn from here to there.
Yeah,
That's right.
yeah, and
So thank you, Ken. You have impacted myself and everyone else who gets that message from me.
and you know what? I applaud your open-mindedness to listen to a knucklehead like me. But and my statement though had to do because sometimes I like to go back and test some of the past trades, and I may go to a trade that not a trade but a strategy that I haven't worked with very much or what have you, and so I'll consult the paperwork, and it'll talk about these different criteria, and it can get very confusing.
Yep.
And you and I always go back and forth about this, about
Here's an example of confusion. I can have a trade going from here to there. I can also have a trade going from like this point up to this point, and sometimes they can intersect two different points and can hit on the same candle sometimes.
Yeah,
And it can create a confusion. Well, which one is it? Is it this to this or this line to that line? So so that's why I've been putting those lines in the screenshot. So at least you know where I'm drawing a line from and to. Because sometimes there are multiple places I can be drawing the line from and to.
yeah,
But yeah, so I just drew it from here to there and put that in the screenshot so that people looking at it would know those are the points I'm drawing it from and to. Otherwise, it can be confusing as to,
yeah.
and I don't like writing words.
I know you.
All the words you see on the spreadsheet, Becky wrote those. Becky puts all the stuff in boxes. She maintains all the stats, all the numbers, anything in a rectangle, she created. I do not like to write spreadsheets. I do not, all of my stuff, every trade I place, some people do spreadsheets. These are all my trades here for the last couple of weeks. They're just on a piece of paper with all the entries, target stops. It's just written, handwritten. That's me. I'm not a spreadsheeter at all. I hate spreadsheeting. Becky loves it. That's what she does for a living. She manages data for a living. So she handles all the stats, the numbers, maintains everything. So that's why working with her works perfectly because I do the stuff she doesn't like doing and she does all the stuff I hate doing. So it works out really well. So it's good to have someone to work with who you can communicate with and share information with is really, really good. If that's possible, or even use our Facebook group to hook up with people who you can work with, start talking to people. The next thing you know, you got a friend to bounce ideas off of. Sometimes you're thinking about doing something, but something you missed. It's just good to, or if you have a typo on your trade but you always want to verify your trade with someone else, it can save you a bunch of thousands of dollars, as I found out with certain people when they're just made a mistake that would not have been a mistake if they were working with someone else and they would have said, hey, dude, how do you get this number here? It's kind of off. And then, oh, made a mistake. Especially with futures, you don't want to make those mistakes. It helps to work with someone else if at all possible.
Which is why I like Becky better than you.
Oh, that's right now. You're gonna make her smile now. She'll be all like, "See, I told you so."
Okay, I'm out. I'll let you go back to what you're doing.
All right. So, does it answer your question, Olga, about the TXT trend line? Where to draw the lines? Is there anything else? What is the strategy for RTY? Your picture shows super trend. Your strategy list is TSD. Strategy list is TSD. I'm not sure what you mean. Strategy list is TSD. Yeah, oh yeah, that's the name of the strategy. The what's on the chart is nothing but the listing of the indicators on the chart. It has nothing to do with the name of the strategy. What's indicated on the chart has nothing to do with the name of the name of the strategy. I can call the strategy Olga or Bob or Steve. It's just a name. But what you see on the chart is the names of what's indicators are on the chart. That has nothing to do with the name of any particular strategy. So the super trend is just one of the indicators on the chart that colors the candles, but it has nothing to do with the name of anything else. It's just one of the indicators. If I change the sequence, it could be, if Bollinger was first in the listing, it would say Bollinger first. So that's nothing. 110 email. TXD, look at 110 email. Can't do that right now, but on the email, you mean on the chart, it will list. I on the email, I put the name of the strategy. What's on the chart, what's shown on the chart itself is just a listing of what indicators are on the chart. So that's all it is. The email shows I tell you what strategy is valid, and the picture of the chart just has a listing of what indicators are on there, but it has nothing to do with the name of the strategy. All right. So I'm going to head back to the handout right now. Yeah, unless there's any questions anyone wants to go over, anything at all. I'm open to anything whatsoever. Any questions, any strategies? Right now, we're back to trading. Okay. I'll be available, Olga, this evening, or probably after 6:30 p.m. at the earliest. Email me what time's good to meet. I can talk to you around 6:30 or after 8:30, either 6:30 or 8:30. Just let me know and we can meet up this evening. If you want to do it on Zoom, I'll do it with you on Zoom. Otherwise, we can just do a phone call. No problem. All right. All right, 6:30. Call me at 6:30 and we'll talk. If you want Zoom, let me know. I'll do a Zoom meeting with you. All right, so I've known Olga a long time from South meetings in the South Bay with options group. So I've known her for a long time. Okay. Trade join status. Features. And going back to the handout. So the trend line thing I just showed you. If you want to set it up yourself and just go through it, I put a couple of examples in on the handout. If you want to try to recreate it yourself, just to play. I put a listing of all the valid trades for Australian dollar and Canadian dollar over the last 20-something years are listed in the handout. Okay, it's total 85% wins since 2003. If you put dollars and cents to it and numbers to it, it's just like we did before with the with the profit and loss. It's just math. It's just wins and losses. As long as you're consistently trading, you can literally go through this. If you were risking $1,000 a trade, you can literally go through and say plus 400 minus 1,000 plus 400 plus 400 plus 400 plus 400 plus 400 plus 400 plus 4 plus 4 plus 4 minus 1,000 plus 4 plus 4. That's literally, you can do that math. All these plus 4. Okay, you can literally just do that math. It's that simple. And when I say average, 40, we average a 40% return. Average. Some will be more, some will be a little less, but the majority is at least is around 40 something percent return. If you want to make more money, you have a bigger account, you don't have to risk $1,000. You can risk $2,000 per trade. You can risk $10,000 per trade as long as that $10,000 does not represent more than 4% of your account. You can risk $100,000 per trade as long as that 100,000 does not represent more than 2 to 4% of your account. Okay, so everything we do is very scalable. I've had people approaching me right now about managing bigger accounts. So we're talking about it. They want me to be more actively involved in helping with some funds. So it's something kind of slowly working into if the situation is right. But these strategies work extremely well for any size account. If you have a smaller account, $4,000, $5,000, $6,000, currency futures only. If you have a bigger account, 15, 25, 50,000 or bigger, then currency and index futures. If you just want to start out low risk, currency futures, risk $100, learn to trade, and then build up, get bigger as time goes on. Currency futures are great. You don't need a big account to learn and get comfortable and then start getting bigger. There's no difference in risking $100 as risking $1,000 as risking $10,000. It's just having a bigger account. That's all it is. Okay, but it's the same type of strategies we just saw. We went over basically two strategies, and that's our approach to trading. If I go back just going to flash back real quick to that last strategy we kind of touched on. You see how this trade, Russell, was after the market had already dropped? Well, the same way we have strategies that would get us in up here when it touches up a Bollinger Band and starts to rolling over. We have strategies to get us in up here, but we also have strategies to get you in after the trend is already established and moving lower also. Same thing up or downside. So that's why we have multiple strategies. We just can't trade one thing. That's why we trade multiple things. The same strategy will not get you in here as here. It doesn't work like that. And we always want to have at least 8 to 15 potential trades every month. But you don't have to trade a lot. You just have to have good quality trades. It's not a quantity, it's quality. All right. So all these are trades. If you want to set it up on your own, let me just go ahead. If you need help, let me know and I'll try to help you if you can. For those who want to work with me on coaching, I can work with you one-on-one. I don't do groups. Someone asked me why I don't do groups. The reason I don't do groups is because I might have to, everyone learns at different paces. They have different backgrounds. And the words I use to describe something to one person may be different than the words I use to describe it to someone else because of how they process the information, how they think, their technical background, academic backgrounds, social backgrounds. They don't all think exactly the same way and take the information in the same way. So sometimes I might have to say the same thing 3 or 4 different ways for one person to understand it because I have to key in on how that person thinks, and I might say something and they're just not getting it. I'm like, why are they not getting it? And that's where I got to find a different way to say this, to show this, and for them to understand it. So that's why I like to work with people one-on-one. So I want to make sure they get it. This is way too profitable to not get it right. And it's also futures, you can lose a whole lot of money really fast if you get it wrong. So that's why I double check your orders before you place them the first few times. basically hold your hand going through this stuff because you want to get it right. You don't want to mess up. There's too much risk here with futures. You can lose a lot of money really fast. So you want to try to minimize the number of mistakes and get it right off the bat. And so that's why I do one-on-one. And for right now, I'm taking $250 off the future swing trading program. That's this one. So subtract 250 from this price. Options, same thing, 250. And if you're doing options and futures, I'll take 750 off the combined price. So for this month, so let me know sometime soon. Sooner is better when, especially with the futures, because it's just, we're already trading, and the first one trade for the year already happened with that Russell we had talked about a little while ago. That was the first trade for the year. Second one is valid right now. That's what I'll be talking about with Dustin a little bit later. But this is our time. We love the futures. The futures is our bread and butter. 95% of my trades are futures, probably 5% are options right now. At certain times, I'll trade more options than futures. I'll trade more options in probably March, June, September, and December, all of December with options only. The rest of the time, I'm focusing on futures, especially currency futures. That's, like I said, that's the bread and butter. That's the best. So I said everything one-on-one, but I really need anyone doing the strategies to commit to 3 to 6 months of trading the strategies. You need 3 to 6 months because one of those months might be the losing month. It happens. So you need to be able to get through that and see how you recover and see how you keep making money. And it's not a big deal to take few losses. As long as it's a valid loss per plan, no problem. Keep trading, you'll make it back. I'll try to go over your trades with you each month if you want me to make sure everything is going right. Don't make assumptions. I want to see what you're doing, good or good, bad or the other. So let's make sure you doing everything as it needs to be, and we'll get it really well done because it works really, really well when you nail this, especially the futures. It just works. It's very exact. We can predict income, and it's exactly what a lot of people are looking for, predictable income. All right, what months, Olga's asking, what months do you concentrate on options? I concentrate on options in March, June, September, and December because those probably 2 to 3 out of those 4 weeks for those months involves rollover and quadruple witching, and December is no trading in December at all, basically for a day or two. And it's usually market manipulation end of the year. It throws the technicals off. You have rollover, expiration, and holidays. So December's all options all the time. And during those first 2 to 3 weeks in March, June, and September with rollover and quadruple witching, also options only. Those are the smart things to do during those times, no futures. And that's shown in the trading plan when it says the no trade dates. Don't trade during those times. And the win-loss stats reflect not trading though during those times. The list of trades you see reflect not taking trades during those times. And that's how we get the high win-loss percentage. We don't take trades during those times. It really helps a lot to know that. That's basically our fundamental analysis portion. But it's kind of behind a curtain, so to speak. All right. So unless anyone has any questions, we're going to wrap it up for today. We're going to meet again in 2 weeks, and that'll be on options on the 26th of January. And we're going to focus on options for that. We'll look at the big market picture. Right now, the market is just doing what the market does. It pulls up, pulls back to support. We're at markets pulled back to intermediate term support on the big monthly charts. So it's just massive uptrend, nothing strange going on. All right, so if you want to work with me on futures, let me know within the next, preferably this week, if possible, or very soon, get you started going right away. And otherwise, I'll see you all in 2 weeks. You all have a good day. I'll send this recording out this afternoon for anyone who wants to watch it, and you can comment or call me or email me, message me with any questions. All right, talk to you all soon.
Thank you.
Thanks.